Hi everyone, and welcome to this afternoon's webinar. I apologise for the slight hiatus. Actually, the dog started to bark and we weren't sure if there was anyone outside. Anyway, apparently, I don't know, he's barking at something. As I said, welcome to this afternoon's session where we're going to be looking at the indices, we're going to be looking at some commodities, and we're just going to take a quick peek at what's happening in the forex market, because there have been some very nice moves, certainly on the dollar and the British pound. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So for those of you who maybe are coming along for the first time, we're going to be looking at the charts through the prism of what we call volume price analysis, which is essentially boiled down to we look at price action and we look at the volume that is supporting or not supporting that price action. Because what we want to do is, first of all, we want to identify whether a move that we are seeing is authentic, is it genuine, or is it a trap? And we do that by looking to see whether there is a one confirms the other, that the price action and the volume confirm each other, and if not, we get an anomaly, and that means that likely a trap is being set. And you know, as I said, and I said earlier in our webinar this morning for the forex section, for this forex session, price action traders, I have great respect for them. You know, vast majority of traders are price action traders, but wouldn't it be nice to have one indicator that is on your charts that could actually help you to validate what you are actually seeing on that chart? And that's what volume does for you. It's all explained in the books that you can find on Amazon. The basic concepts of the system are in a complete guide to volume price analysis. There's also a forex version as well. And to help traders and investors, the book comes with a companion, which is examples. There are about 200 in there across different time frames, across markets, indices. This one is for indices, stocks, and there are some commodities. There's also a forex version as well, because the great thing about trading is everything repeats. We are, as people, we do repeat. We do, you know, we follow the same pattern, and certainly in the market. You know, as we know, our emotions are always being triggered by the market makers, the manipulators, and what volume price analysis does for you, it highlights when they are being triggered, and you know, try and persuade you to do the opposite. Sometimes what you see on the chart, but as I said, with the methodology, you can, as I said, you will have an enormous advantage over your fellow traders. And what the examples do is they repeat all the time. You know, the candle patterns repeat, the anomalies repeat. So it's, once you get to, you know, once you can spot these anomalies, as I said, you will become more confident, and with confidence comes consistency, right, very quickly. And I'm really going to whiz through these, because as you can see up on my screen, I've actually got MT5 up today to look at the indices. This is a version of the futures contract that we normally look at, an MT5, and I believe MT4 as well. Check with your broker, because more and more traders are being given access to markets that, you know, certainly when we started, God, Lord knows how many years ago now, you were certainly, you know, not able to participate in. Even when we started, forex wasn't I don't think it was possible to trade forex back in the day, David, was it? I don't remember, certainly retail, so which is why we started in futures. So essentially it's what we call a synthetic contract. It's based on what's happening in the futures and the cash market, and the broker puts it together, and you apply volume price analysis, and also those of you who've got our indicators, you apply those as well. And I've got multiple time frames here. I've got a Renko, which is a non-time based chart, I appreciate. I've got the 3 minute, the 10, and I've got the hour as well, and we'll look at that in a second. David will have his Ninja Trader up, where he will be looking at the actual futures contract. And I think we're going to look at gold as well, because the dollar is on a bit of a tear. But before we do, what is happening generally with regard to sentiment? I said this morning, in fact, there was another laundry list of what is going on in the background. We have earnings season, we have the election, we have the virus, we have stimulus or not. We have Brexit here in the UK, and I think we've got at least one black swan event, which I think will come completely left field and may also add its own volatility and, you know, has an effect on the markets. I don't know what it is, but I really genuinely do believe we are at that point. The market is so skewed, if you like, in one direction. There are so many weird things going on generally that it really is setting itself ripe for, I think, a major sell-off. When that comes, certainly VPA will help us to identify. We've had some signals already, but we are a little early. And in fact, this actually came through my news feed earlier on. The short sellers, there aren't any, because the market just keeps going higher and higher. And it's almost a truism what we say, that when the last bear, you know, has stomped off back into the woods, there's, you know, all the shorts have gone, you know, something is probably going to happen. And October, as I said this morning, it kind of sends a little bit of a shiver up the spines of both traders and investors, because it's always, oh, October, something terrible is, you know, is about to happen in the markets. Now, October actually isn't statistically the market when the month where we've had there have been, you know, there have been other months when we've had more pullbacks and corrections in the market. As I said, September, I think, is the one, if you did it statistically. The issue with the thing about October is that it is the month where we had the two biggest crashes. We had the Wall Street crash, and we had the one in 1987. So they're kind of seared into the consciousness of traders and investors. And I suppose, if you can sum everything up, and I've summed it up as this, it's chaos, it's conflict international. We've got flashpoints all over the world on a geopolitical stage, and there is conflict at the moment between what governments are doing, what people don't want to do. Is this right? Is this wrong in terms of the virus? And we have an awful lot of confusion. So is it any wonder, you know, things are the way they are? And what I think, and David agrees with me as well, and perhaps you'd like to think about this, is this tumultuous period that we are living through, and it is tumultuous as I said, for the reasons that I've outlined. There is going to be change. There is going to be change that we don't even know what that change is going to be. But the one thing I can confidently say, hand on my heart, is that things, you know, are not going to be the way they were, you know, before this virus hit us. So things are very uncertain, very unstable, and as traders, we just look at the charts, we see opportunities, and we take those opportunities. And I think more and more people will be coming to the markets, because at least they do offer you know, anyone with maybe even with a modest amount of money, the ability to actually make some money, given, you know, the consequences that the virus is going to have on the impact on employment. Now, what else are we having today? Just to mention, we've got Apple is launching its iPhone later on, and it's Amazon, I think it's Amazon Prime Day as well. I'm not going to go through it in detail, but what I am going to put up in the comments section is I'm going to put this article up from Bloomberg. I subscribe to Bloomberg, and it actually explains, because as I said earlier, there's a lot of strange things going on in the markets at the moment. Not least is stocks are going up quite strongly, but so is the VIX, so are the volatility indices. That shouldn't happen. You know, it is a distortion. The market has been distorted for all sorts of reasons, obviously with the QE that the central banks have been throwing at it, and obviously, you know, the money has got to go somewhere, and has created this this raging bull market. But also in the options market. Now, there are all sorts of reasons why the options market is behaving the way it is. One of them is because there has been a huge influx into this market from retail traders. It's one of the it is the only way that you can participate and taking a punt, if you like, on very expensive stocks such as Amazon, particularly Amazon. You know, if you wanted to trade Amazon stocks, how much margin would you need on your account? But you can do it via options. So if you think the stock is going up, you buy calls. What's also happened with options, and I'm not just going to mention this, is you can now do weekly options, which you certainly couldn't do when we were trading options back in the day when we were doing covered calls. So you have this weekly options market that never existed before. You have greater participation. So I am going to put this up because it explains a lot of what, you know, there's the things that you're seeing maybe on charts, and you can't really sort of maybe understand what is, you know, can't make sense of what is going on, but it will at least give you a little bit of a background. You don't have to be an options expert, but know that, you know, if the options market is not behaving, the chart is not behaving as it should, that is another signal. So you put all these signals together. Short sellers, you know, fleeing the market, stocks rising, volatility indices rising, VPA signals on the slower time frame charts, huge candles with small amount of volume underneath it. These are not going to happen in an hour, may not even happen tomorrow, but something is certainly brewing underneath. So that's what I want to say on that. I think I've covered everything. Just the final thing about options, this is for those of you who want to do Forex. One of the things that you can look at investing.com, and this is the URL up here. Obviously, the British pound hugely affected by Brexit, and we'll have a look at some of the certainly I've got the pound CAD and I've got a cable up. One of the ways you can judge how volatile a currency pair is at a particular time is you look again, you go to the options market. Now in Forex seems to be working okay, and you look at what is called the implied volatility, which is this number here. This is just the overnight one, because we're with Brexit, we are coming up to a deadline, which is the 15th of October, when apparently there is supposed to be a deal done between the EU and the UK. No deal so far. We've had comments from both sides, contradictory comments, one of them saying, well, we think there's a deal, the EU saying, no, we're, you know, miles away from a deal. So you look at what the options market is predicting or anticipating, and you look at the implied, this is the implied volatility, and it's up at sort of 13 to 14, which is not excessive. I have to say, it's not excessive, but compare it to where it was a week ago, it is obviously elevated. So that tells you that, you know, the market is anticipating more volatility. Now tomorrow's implied volatility is going to be even more interesting, you know, particularly if news comes out that, you know, the two sides are so far apart and nothing's going to happen by the 15th, certainly if this goes into the 20th. So it's a nice little tool. It's not just for cable. You can see them, all these other currencies here. Let's just have a look, pick one at random, what the Euro CAD is. Yeah, you can, and this tells you the difference. The overnight on the Euro CAD is only 8%. So you've got to judge for what, you know, how volatile that currency pair is likely to be. So a little bit of a tip there, which I hope you can use. In terms of news, what is happening? Well, 1:30, that's come and gone. That's the CPI. Let's just refresh that. See what happens. That came in on point, but I also have a backup with financial juice because it tends to cover, picks up perhaps items of news that well, certainly Forex Factory doesn't. So we've got the Bank of England, Andrew Bailey speaking at 3 o'clock. Where's he's popped up, David? He wasn't there. He's been speaking, certainly wasn't there this morning. Let's have a look. Oops, let's have a look. We've got some auctions, we've got a Fed speaker, and then we've got the US federal budget. But generally speaking, all the fundamental news has gone through. So we're back to the election, the virus, the stimulus, maybe the black swan, and obviously earnings. Right, I'm just going to turn myself off for 1 second.
Hello everyone, good to be with you. Moved over to the NinjaTrader platform, just move the chat box out of the way. I just thought we'd start with gold for a change, purely because there is a terrific move going on. Gold is being sold off very heavily, as you can see. We've got 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and daily. And this is the sort of price action which gladdens my heart. I'm not because it's gold. I actually like gold to go up. A bit of a gold bug at heart. But in terms of the actual trading opportunities that it presents and the fact that it is to the short side, and you really only have to look at the daily chart. Actually, I'll just pop that up full size. Let's just pop that up full size. There we go. I mean, in one session, which is not even a full day, we've moved this distance, and it's taken 3 days to claw its way higher, and all of that is now being wiped out in one session. And that's the difference between trading short, trading long. Generally, as you can see, you know, the march north here is fairly considered. It's fairly even paced, and then you get bang, bang, bang. You know, the bigger widespread candles are very much to the downside. They're not to the upside. It's not always the case, but I'm afraid, you know, over 20 odd years, I would say if you analyze all the trading positions, certainly myself, probably not so much Anna, but certainly more of mine, I'd say probably 75, 80% of them would be to the short side, something like that. So it's roughly 80-20. Just pull up, let's have a look at the 3 minute, look at really any of these. What's interesting, this is the nice thing with Ninja is it does actually print the local time correctly, so you know exactly where you are in terms of what was going on. So this is 1:30 our time when a lot of the fundamental news comes out. You'll see reactions in terms of the cash markets open here at 2:30 over here. But in terms of what's going on, this is Globex trading. Nice trap move there, pushed up on this particular candle. So the market's gone up. We've got volatility trigger. It's a trap, and then the market sells off very strongly. You've got volatility triggers on the way down. Certainly one here, into congestion, continues lower. Look at the speed with which it's gone through this low volume region on the histogram, carrying on down. Nice price waterfall. You really only have to just eyeball the difference in colors between red and green, and you can see just visually how much selling volume there is in here as opposed to how much buying volume there is, just from a very simple analysis of red and green in terms of the height of the volume. And then when you start to drill down into it, you've got the price waterfall here, you've got rising volume. Then you've got this effort to rally. What's occurring in terms of volume? The volume is falling. It's falling away quite dramatically. So that's telling you that, yeah, this is going nowhere. This is just a minor reversal. We're going to stick with the bearish trend. We're going to stay in the trend. We're not going anywhere. We're just going to maximize the profitability. As I explained this morning, this is the key to trading success, in my humble opinion, because it's not about understanding the markets or understanding price action or the indicators that you use or anything else. It is having the ability to interpret whether a reversal in a profitable trend is actually a reversal from primary to primary. In other words, the trend that is in your direction, is it reversing totally against you, or is it merely a pullback? And it's a powerful application of volume price analysis, and we explain it in detail in the program. We carry on lower, get down to the volume point of control, ton of volume under this one. Market tries to rally again. Look what's happening to the volume. It's falling away again. And all of that is just giving you that strong confidence, that confidence to actually hold the position. And in addition to that, when you look at the trend monitor, what's the trend monitor done through these phases? Absolutely nothing. Hasn't even transitioned into a darker color, hasn't even transitioned through this phase where we've got down to the volume point of control, where we're expecting to see congestion anyway. It hasn't moved. It's still telling you that this is a bearish move, and just hang on in there for the time being. You know, there's nothing from a price-based perspective to tell you anything different. The same is true on the 1 minute. see if we had any transitional effects here. We did. We came down to the volume point of control. We went into it. We've also got some nice areas of support and resistance building in this region, but we came down here. We had a volatility trigger, ton of volume, tells you instantly that the market makers, the big operators are in there. We like to see some sort of congestion. We're seeing it. We get a minor reversal, gets back to the volume point of control, which may or may not have been here. It might have been at a higher level, could have been up here, jumped down here. Then we go sideways. Then we're coming into the issue of price-based support because we're above this. We've got a decent level here, pretty strong level. Finally, we break through it. What do we get? We break through the next level as well. We then get another ton of volume coming in. We know the market makers and big operators are in there. Volatility, what do we expect? Into congestion. Another volatility trigger into congestion. We keep going down though, more volume coming in. So this is just a stepped transition, but the only change in color on the trend monitor is in here. We went from bright red, we went into a darker red, just about to start to think the trend monitor is going to transition through into a bullish reversal. In other words, we're going from this primary trend into a primary trend higher, but it never actually makes it. It starts to flash it, goes back into the darker red as that move apparently weakens. The volume is pretty low under here, it's pretty weedy, it's not strong. It then weakens on the trend monitor and we come out the other side and really just confirming that, yeah, we're still in this to the downside. You go right down onto the 15-second, of course. Yeah, a lot of that is encapsulated in there. I'm not suggesting you do trade this sort of time frame. I do, but I'm not advocating it as a be-all for everybody, because some people will, and you may be amongst them, will be horrified at the thought of going sub 1 minute. You have to be very quick on your feet. You're trading literally in and out all day long. It can be very profitable. It may suit you, it may not. The only time I would suggest, or that you are almost you have to trade in this time frame, is when the primary market in the slower time frame is in congestion. So if you're on a 5, 10, 15 minute chart and you're in congestion, really the only effective way to trade it is on these very fast time frames. But when you've got a move like this going on, you want to be on the slower time frames out here. You can be on the 1, 3, 5, so on and so forth. Just go down onto the 10 minutes, see how that's shaping up. You've got volatility, a little bit of buy coming into that one, breaks away again, down to the volume point of control, volatility trigger into congestion, breaking down further. We're still going. And the trend monitor here, no transition, you wouldn't expect to see it. And lots of levels up here of price-based, either resistance in this case, very strong. The market was trying to penetrate that, couldn't get through. Then you get these levels underneath, this cluster here, which is immensely strong. These 3 or 4 levels here on their own are strong enough. This one has been tested 6, this one 4, this one 3 times. But as a cluster of 4 or 5 on the accumulation distribution indicator, that is an immensely strong area. And the reason it's so important is if you're going to trade this as a breakaway trader, you may be waiting for the congestion, you're waiting for it to develop into a trend. It gives you very clear regions of, first of all, where that breakaway is likely to move through. And obviously the floor of support has been broken and broken, with momentum. But then in addition to that, it also gives you a very clearly defined region to place your stop loss, provided it meets your money management rules. You go above this level. In terms of if the market did indeed retrace, it's got to fight its way back through all this lot of price-based resistance, which is really going to require some huge effort. In other words, a lot of volume down here to drive that market higher against the bearish sentiment that's self-evident. So it gives you that immensely protective barrier in any reversal against you once you've got a position in the market. And it's one of the great facets, if you like, of trading breakouts, breakaways. They are very clearly defined and defined not only in terms of the move away, but also in terms of positioning your stop loss either above or below, depending on which direction the market is heading in.
Actually, on that note, if we stop it, if we cut it there,
yeah.
would you mind coming just...
No, I'm just going to pass back to Anna for a moment. Hold on.